Top of the morning, everybody. Today is the 10th of June, 2026. And today I'm just going to do an update to the Mayday portfolio. I was doing some research and I couldn't find the original criteria. I tried to reproduce it, couldn't. So anyway, I've got a new, slightly different criteria. So I'm going to pull a couple of the stocks out, add a couple more, and go through that. But before I go through that, a quick disclaimer. Remind everybody this is for educational and entertainment purposes only. And with that, let's get into it. All right, Captain Ron here, Mayday portfolio. Top of the morning to everybody. Quick look at where all the portfolios are. The LH is still down, waiting for things to pop, and nothing's popped in the last 2 months. Did very good at the beginning, but not recently. But today we're looking at the Mayday, and a quick look at the history of the Mayday. It is generally pretty stable and headed up, but unfortunately I wasn't able to reproduce the original search, so I didn't take very good notes. So anyway, this time I'm going to take better notes. So it's a slightly different search, came up with slightly different results. I tried to overlap them as much as possible. The new search, very big companies, trying to find 20 or 30 efficient ones, and then choose the best one from each sector to provide sector diversification. And then I'll equal weight all of them, and we'll go look at the results. So some of the rules of this one's got no bonds in it. Rebalance on big market swings, or at least every 2 years, pretty standard. And then this one also rerun the search annually and adjust it as needed if other companies become a better fit for this particular portfolio. Basic search criteria is any company bigger than 300 billion. Came up with 43. And then I pulled them up by sector, and then I pulled the most efficient one out of each sector, and I came up with this portfolio here. And then looking at the results, 5 of the companies that are in the current Mayday portfolio we're going to leave in there. And then these 3 we're going to remove. And in these 3's place, we're going to add 5 more. So it'll be a 10 stock portfolio. Here is Portfolio Visualizer. I like to use the legacy UIs. And then let's go into an efficient frontier. And I'm just going to type in, there's only 10 of them. So M, WMT, Walmart, ABGO. Broadcom, Eli Lilly, LLY, AbbVie, Tesla, Cat, Netflix, HSBC Holdings. The last one is Microsoft. We're going to hit view. We want to make sure we've got at least 10 years of data. This is how we run Portfolio Visualizer. When I run it this time, Sharpe ratio 1.72. Oh, we are not equally weighted. And then when you put those in, you've got to select equalize, equal weight. Equal weight for our portfolio, 16 to 26. And that's going to come up with 27 and 16. That's pretty close to what I got before. It varies depending on when you did it. So 27.6, 16.5. And then if we look at the efficient frontier, we can see here's our stocks. Our current portfolio is right there, very close to the line, equal weighted. And that is how we come up with the expected return and standard deviation. Okay, so I have jumped to backtest portfolio, and I have loaded the Mayday portfolio in here. I've got 10 years of data. Let's do the annual rebalance. Analyze this guy. Here's our portfolio, and we can see our portfolio summary is averaging 30% standard deviation of 18.4. That's pretty close to the numbers I had in the presentation. I loaded the data the other day, so we're going to go with that. Hey, quick side note. Do I really expect this portfolio to make 30%? No. It probably won't repeat in history what it's done in the last 10 years, in the next 10 years. But I do expect it to do pretty well. For the most part, it's a diversified portfolio. It's done really well in the past. It ought to do pretty well in the future. We're going to watch it, and we'll make adjustments as needed. If we look at the results from the portfolio analyzer, this portfolio looks like it makes a 30% return with a 19% standard deviation, which makes the minus 2 sigma very an optimistic minus 8.3%. If you look at the last 10 years, we can see this portfolio is very consistent and returns are generally positive. Alrighty, and just to remind everybody what those results mean, if we go back to the normal distribution and we can look at the mean right here. So the mean in this case of this portfolio is 30%. The standard deviation between any of these dash lines is 19.4%, which makes our minus 2 sigma 97.72% of the data is above minus 2 sigma. It makes this number. So in a year, we don't expect this portfolio to drop more than 8.3%. And with that, that is the quick update. I will go ahead and make that change to the portfolio, and we'll see that in the next update on the Mayday. All right, that's all I got. Bid everybody adieu. Happy May 10th. Bye.